tonight? Oh, I am cold. Hi, Dale. Hi, Zane. Whoa. They are still doing that tomorrow, huh, in South Dakota? I got invited to speak in South Dakota, and it was virtual. Hey, Brett. Hey, buddy. Life is good. Life is good. There, that's better. Not enough light. How is life for you, Mr. Michael? Hey, John. Hi, Erica. How's it going? Hi, Bruce. You fighting fires tonight? Okay, stop in, say hi. There are quite a few of you watching. That's awesome, John. I love it when people say they binge. I'm not sure that's a good thing, but I'm not sure I could listen to me that long. So thank you. I appreciate it. And thank your friend for sharing. Hey, Joe. No, so I think Joe was asking anybody on here if they've done anything with industrial hemp. I have one client, one person that I talked to, not even a client yet, that was talking about industrial hemp, but I've not heard a ton about it, Joe. Not heard a ton about it. Hi, Frank. Hi, Brady. How's it going? We're doing Thanksgiving at my house this weekend. I get to cook Saturday. We're going to do it early. And so tomorrow night, making pies. Taking out the turkey. There you go. Joe's got some information on anybody wanting info about hemp. Oh, John. That's awesome. You do know my personality well. 60 in 6 days. Good for you. All right, guys. Last week I did this and a couple people jumped on and did not know what's going on here. And so for anybody that's new to the page or just stopped by and Facebook notified you or whatever's happening, I am the author of the book Farming Without the Bank and Wealth Without the Bank or Wall Street. And so I am just going to go over some of my client meetings. That's what we do every week. Go over client meetings and for farming. Whoever I met with during the week, we go over that, talk about how they're going to get started in the process of farming without the bank. And so if you're a little confused at what that is, then I encourage you to be like John and binge listen to the podcast, Farming Without the Bank. And obviously you need to read the book. And we are going to be talking about some infinite banking concept stuff. So that's all good. No more fires for me. Nice. I'm glad you're home and safe, Bruce. You can always tell in German, but you can't. Oh, Brian. Ryan, that is so true. You can't tell us much. This German, though, I like to, you know what, you guys, I'm going to put my headset in. I hope that does not hinder and helps how it sounds. It's a little bit echoey in my room, but no, you can't tell a German much, but I hope that this German does not have the arrival syndrome. So that is funny. I was just telling the client this week, I have a shirt that has a cactus on it that says I'm not a hugger. Yeah, I don't need any hugs. Not my thing. I'm German. We're good. No hugs needed. Oh, we were talking about that in my podcast for tomorrow. Tomorrow's podcast that's coming out that I am doing with Tim Bickett. And so that was a good one. Oh, you guys, I love it. I love it. Keep it going. Okay, so let's get going on client meetings for the week. I don't know that I really had a theme this week. I did have a lot of people again this week that did not have insurance. And so I just want you to think about that. If you don't have life insurance, what happens if your spouse dies? What happens if you pass away and you're single? Who's going to clean up that estate? Because there's still loans out there. And so that all has to be cleaned up. So think about that. We need to have life insurance. So I had one guy whose dad was all planned out. I see it. I don't see it quite as planned out as this guy had it, but I do see that we do some estate planning. And so super exciting that he was doing some estate planning and that dad has everything all divided. Everybody got what everybody's supposed to get already. And they've taken over and there's life insurance in place for the off the farm siblings. And the farm kids are paying for that. And absolutely fantastic. Dad actually is basically owner financing the two that are on the operation. He's owner financing them with the land, and they get to make that payment to dad along with the lease payment to help him live. So it was very nice to see. Now this particular client actually had the policy that he had on dad. I said, make sure that's whole life. Just because they tell you it's whole life doesn't mean it's whole life. I did not see it, but very promising because it says whole life on it apparently. So that's good. But then he said, I actually asked my local agent about this. And my local agent said, well, if you want some life insurance, I can borrow you life insurance. I'm familiar with that bank on yourself concept. Okay, let's get this clear. This is not bank on yourself. This is the infinite banking concept. Pamela Yellen learned it from Nelson, okay? This is the infinite banking concept. I don't know. I'm assuming that she's teaching this right. I don't know for certain. But if he's familiar with it. So he says, if you want life insurance, I can sell you some life insurance. But I wouldn't recommend that you borrow from it and use it like that. Okay. So, and I said, why? Well, he says there's fees there's lots of fees. Fees? There's no fees with whole life. There's fees in universal variable indexed and flexible premium paying and all this other crap, right? There's fees in that. But there's not fees in whole life. There's a cost of insurance, and there is a cost of insurance in universal variable index. And that doesn't even work the same necessarily. And so we got all done. We were talking about everything. We went through everything, and he said, so there's really no fees? Like, nope, no fees. Just like I said before, make sure dad's policy is whole life. Right? Make sure it is whole life and it's not something else. Agents do not know what they're talking about. If this agent has heard about it, did he read about it? Did he buy Nelson's book? Did he go directly to the source? Did he just hear a flippin' ad on the radio? Like, what did he hear to say, I've heard about it, but don't recommend it? Now, thankfully, the client had done enough reading and enough research and enough listening to podcasts probably that he knew better and that he was going to come and do some due diligence, right? But they're outside of an interest rate that the insurance company charges you on a loan. There aren't any fees. There's no fees to take a loan. There's no fees that I'm going to charge you. There's no management fees because it's not under management. It's not tied to the market. It's not reflective of the market like the index. So no, there's no fees. It's not universal life. It's not a byproduct of universal life. And so, unfortunate, but needless to say, everything else was good. It was nice to see that he had some off the farm income, and he had another business. He did some custom farming and had another business that he was able to generate some income for living expenses because the farm, they're just getting started. They just kind of took over from dad, and they've had to incur all those expenses, which is some growing pains. So we're going to be able to start something small with them and not get in over our heads because we're still in that startup period. Let's see. Let me see what you guys are talking about here. Oh, you guys, thanks. Brett, you can go to farmingwithoutthebank.com, and my book, Farming Without the Bank, is in audio, and you can get it on farmingwithoutthebank.com. And then go to the store, and then there is a link for the audio there. Wealth Without the Bank or Wall Street's on audio as well. All right. The next guy is running cows with dad. We don't have, not a whole lot major outside of what I normally talk about, but starting again, just kind of starting, running some cows with dad, and, you know, obviously using some of dad's equipment and that sort of thing. But it was interesting because this guy he's really like listening to my podcast, listening to Working Cows, educating himself around regenerative agriculture and doing some cover crop stuff. Dad doesn't want to do cover crop stuff. And so, kind of a battle there, but he knows enough that he needs to just go out on his own, do his own thing. So he's doing his own cover crops, and dad can watch to see if it's successful or not. But he has been doing the research. It's really interesting to me that I have heard about all these people that do not do no-till. And no-till has been like, I mean, nobody's been doing summer fallow around here forever that I'm aware of. I haven't seen it in years and years and years and years. And it's been no-till. And so it's really interesting to me when I talk to people from other states that are not no-tilling. And no-till is kind of the new thing, or they tried it 20, 30 years ago and it didn't work, so they quit and they never went back to it. And by the time we're trying to get dad to no-till and trying to do cover crops, and it's too much, right? And so he's having to kind of do all that on his own, which is a struggle because the equipment that he's using, he's got to buy different stuff. The stuff dad's using isn't working or doesn't have the correct stuff. And so even though you have an operation with dad, doesn't mean that the operation with dad's going well when you truly are educating yourself and trying to move in a completely different direction. And I see that a lot, that the younger generation is trying to move that different direction and trying to try something. And the only way you're going to be able to do it is to either rent your own ground or buy your own ground. And so in this situation, he's got two siblings that do not farm, and they love to come out and help when they can sit in a piece of equipment. But when it's something hard to do, they're not there. So really having to set himself up and say, you know what, I'm going to need some life insurance on dad, because chances are these two siblings are going to want what they've not necessarily earned because they're not the ones out there farming, but we're going to have to buy them out. Even though the parent sees that, that doesn't mean that that is going to be something that is going to actually be taken care of, right? Like the first guy, dad took care of that. All the siblings knew what was happening with the estate, and he's been estate planning, he said, his whole life. And so that's a wide open book. It's not odd to talk about it because we've been doing it forever. Then I had another client who is single and she has a really good job, but planning for the future. And so not engaged yet, but we can stick quite a bit of money into a life insurance policy because she's got a really good job, no kids, no spouse, really cheap, inexpensive living by herself. But typically I would say go full force and put as much there as you can. However, if we do that, when she does get married, she's most likely going to have to quit her job and move to a completely different town. And she can't take her job with her, or there's no job there. I mean, there's a job there, but it's not the same company. And so are we going to have a job? Are we going to make the same amount of money? So we have to be a little bit cautious and plan ahead a little bit. So it's not just like I'm the accountant planning for today, right? And I had one of those this week too, where the accountant's not helping them because the accountant is just planning for the end of the year. We're not planning out long term. And so we have to do that. When I sit in my meetings with my clients, we're planning long term. What's going on long term? Because we have a premium that has to be paid our whole life. And we have to make sure we can afford to pay that our whole life. And so with her, it's maybe not start as high as we would like to. We'll just maybe notch it down just a hair. But remember, we can get more money in year one. Year one, we have an exception to the rule and we can get a little bit more money in. And so if she's got it on hand because she's a really good saver, so we'll just go ahead and put more of that in year one and then give it that boost. And so every year after, it's going to be a little bit lower. Another guy I had with 3 businesses, 2 businesses and farming. And he really he too, same thing. Dad is not ready to hand it over and doesn't want to talk about it. And so he said, you know what? I'm doing my own thing. I have to, because I don't know if I'm going to get it. I have no idea what's going to happen. And he actually has one piece of ground that he has a contract for deed on. And he is in a position where he has a relative who has a lot of money and said, you know what? I can lend operating money to you. I don't remember let's just say 5%. I don't remember what he's getting for it, but he's like, I'm not getting anything in the bank. I may as well lend it to you. So instead of having to deal with the bank, he's got an operating note with a relative. Perfect. He doesn't have to answer to the bank. If he needs the bank, he can probably go there. But what a great opportunity. And so that really should shine light on people that have a lot of money sitting around and saying, I don't know what to do with it. Well, his relative is not a client of mine. He's not putting it in a policy and then lending it to this guy. But it's either savings account, which is paying nothing. So think outside the box. What happens if I have a lot of money? Well, I can just lend it to other people and be the bank, right? And then he's got to set himself up for 4 to 5 years. There might be some more land coming for sale, and super nice. The landowners came to him and said, hey, we're going to probably be selling in the next few years. So get your ducks in a row because you're going to have first right of refusal. Awesome, awesome, awesome. If you are a landowner and you're going to sell, please think of the guy that's been leasing it forever. Please think of how to make it easier for them to buy it. I've had a couple of those this week, and the next one I'm going to talk to you about that very thing. So at least he's got some time to prepare. This guy does have life insurance on Dad, but it's term. And I don't know why, but I apparently did not ask how old Dad was, and I should have. And it's going to be expiring in a few years, like less than 10. And obviously, what happens if Dad doesn't die in that next 6, 7, 8 years? What happens? Well, we're going to be buying life insurance again, or we don't get anything when Dad passes. And so something we need to think about is maybe buying some life insurance on Dad now if we've got the money to do that. Term is great if Dad dies within that term. Otherwise, not so great. And there's some family dynamics here that are very concerning. And so he really needs to make sure that he sets himself up so that when all hell breaks loose, because it will, he is going to be ready. Couple of those again this week. Massive family dynamics. You guys, it's rare. It's rare that a family does not have a mess and that somebody's not going to be fighting with somebody. And so always make sure that you are setting yourself up to protect yourself. Okay, the next couple, let me take a drink of water. These guys have a lot going on. Okay, next couple in their late 60s. Oh, they're so sweet. I loved them. They are basically, they did a really good job their entire life of providing for themselves, right? And they had good jobs, but now they are living on Social Security and a part-time job and a little bit of a pension. And so, but they had a business and they did not sell the business because nobody wanted to buy it. It was a labor-intensive business. And I'm not going to say people are lazy because not everybody is lazy, but it was a labor-intensive business. And so they couldn't sell it. And then they sold some product off their shelves, which they said, people went to Amazon and they could get those products on Amazon. So it's a little bit, there's no reason for them to buy them from us, but then they'd have the wrong product, or they'd go to Lowe's and they'd get the wrong product, and then they would come to us for help. And people were interested, but they just didn't want the work. And I said, okay, so you guys have years of experience in this industry. Years. And what they did, and I'm not going to say what they did because it's kind of odd and not a lot of people do it, so I don't want anybody to know who they are. But what they did is very DIY in today's world. People will just go watch YouTube videos and do it, right? But they do it wrong, or they don't know how to do it, or the YouTube videos truly don't show it. And so I have recently come across a podcast called Garden Answers. And I have been looking for landscaping stuff and whatever. Came across this lady on Garden Answers and thought, who's she? I'm going to watch this video. Holy moly. That lady has videos, and it was like a year. If you go to her About page, it's like a year and a half or 2.5 years. They quit their jobs and all they do are these YouTube videos and make money off of sponsors. And these people are like, yes, we know who they are. And I said, why don't you do the same thing? You have all the knowledge. You have all the knowledge. Are you teaching people what you know? Is there anybody else out there teaching people what you know? You don't need to do the labor. If you can't physically do it anymore, that's understandable. But there are DIYers that need consultants. They need help. They need answers. Start your darn YouTube channel. You got a smartphone, do it. It doesn't take a lot to get that started and to give people advice. What else are you doing? You're not giving it away. You're not making any money now. What are you going to do? Lose more money? How are you going to lose money when you're not making any money, right? And so something they had not thought of. And I see this a lot with older people, especially in their, you've got your late 60s, because it's not your generation. It's not how you guys did business. But bring it on in till today. Us young people are looking for advice from experienced people. If you had a business and you can't physically do that business anymore, sell the knowledge. Create videos, create a website, whatever it is it's today's world is the technology portion of it. And they need the income. They need the income. So create that. The other thing is that her mom just passed away. And this is where it gets good, you guys. So pay attention and hang in there. Her mom passed away, and so they need to sell some land. But there is, I think there's 5 children, okay? So we've got this land that they just agreed they're just going to sell. And I said, well, would you do a contract for deed with the owner? Oh, no, we just want the cash. I'm like, okay. So we kept going, and then I said, well, unless you do this internet thing and monetize your knowledge, we need some income. The income that you're going to get from the sale of this land is they want to put that into that huge chunk of money. They want to put that into life insurance. But when we're in our late 60s, not mid 60s, late 60s, I cannot take that kind of money, put it in a policy, and automatically turn around and borrow against that as a retirement income that's going to produce enough and long enough that it's going to be beneficial. I just can't do it. We have to capitalize that policy. Like, the numbers don't make sense, and I'm not going to sell something just to make a commission if it is not good for the client. And I said, that does not make sense to me. However, I said, could you do, since you inherited the ground, could you owner finance the seller? And I said, just hear me out here. So I pulled my calculators, and like, if you owner finance him for the next 20 years, you will make $200,000 more in interest. Just on your piece. If your other 4 siblings want to sell theirs, fantastic. No big deal. But if you want to just do yours, then we have a land payment that could go into a policy every year, right? And we could use that to capitalize the policy. And I said, and he would give you a down payment, so you would have something to start the policy with, and we could give it a little bit of a boost in the year 1. And they're like, oh. I said, you have some options here. If you pass away before this is paid up in 20 years, he could keep paying your estate. I said, do you know the renter? Oh yeah, he's been renting from us for 10 years. Okay. So if he's been renting from you for 10 years, we have an established relationship. If he's paid his rent and he's been a good renter and he's put the blood, sweat, and tears into that ground and the fertilizer and the chemical and gotten it where it needs to be. Maybe he's doing cover crops, whatever. He has to go to the bank. The banks want 40% down. And I told these people, I said, if he goes to the bank, they're going to want 40% down. And they go, ooh. Right? Because the wholesale of the land is like a couple $1,000,000 or something. 40% down, the guy that's rented it for 10 years and didn't know if it was going to be sold because he didn't get the heads up, might lose it. Like, even if 3 of the 5 siblings would owner finance, great. Now he only has to go get a bank loan for the other 2, and maybe you will have to divide it. Maybe you'll have to resection everything off. So the bank has their piece of ground that for their loan, and then the owner finance the rest. But if you owner finance something at 5% for 30 years, you double your money. Yes, you have to pay tax on the interest income. You do, absolutely. But you still didn't pay it all in tax. You still made more than if you would have just sold it in one big lump sum. And if you sell it in one big lump sum and you didn't get it from an inheritance with a step-up basis, then you get to pay capital gains. So, is that an option? Can we be super creative around it, even if we're going to inherit it with our siblings? Is it going to pay to get a surveyor out there to survey off the piece of ground that we can owner finance? In a situation like this, it's worth checking into, because they really need the income. They really, really need the income, because they're not going to have enough with Social Security and the pension and the part-time job to live another 20 years. Inflation will kill them. And so it was fun, super fun visiting with them. And we had a lot of strategies. It was a good meeting. But think about that. If you are inheriting land, if you were wanting to have somebody just buy you out, I talk about this all the time. Owner finance someone if you can. If you inherit it as a group, that doesn't mean you can't owner finance them. It just means you got to be creative about it. Can you divide it so that those of you that want owner finance can do that? And the land's already in an LLC. So they could very easily owner finance through the LLC, and then he pays the LLC and the LLC divides it 5 ways. Awesome if they can do that. Awesome for both people. For them, because it makes some interest, and for the buyer, because he'll probably have an easier opportunity, because they would probably be okay with 20% down rather than 40. Or even less, depending on how much you want to work with the buyer. Okay. Hi, Holly. How are you? Oops. All right. The next guy custom feeds cattle. Oh, if he's watching, I'm going to call him cattle. He picked on me because I call everything cows. And I didn't realize that. And I never realized that people up here never said the word cattle. And I was talking to somebody today and they were saying cows. And it wasn't cows, it was just heifers and bulls and, roping steers. And so I have not ever heard that before. Everybody says cows. I've got cows, not cattle. So he picked on me for that. And it was fun. It was fun. He custom feeds for somebody. And this is awesome because he was trying to, do a feedlot on his own. And he's like, you know what? I just keep doing the same thing. It's insanity. Same thing over and over and over. And I'm never getting ahead. So I'm going to try something different. So he custom feeds for somebody. And he actually has, he kind of does it as a partnership. And so some guy he knows has a connection to the cattle buyer. And so they buy the cattle, they ship it to him, he feeds them, he gets paid like a weight type thing, on a weight type scale. And then he just constantly has a flow of money, which is great because he was able to get rid of his line of credit. And so one thing learned from this is that you don't need to own the cattle in order to have cattle, right? Let somebody else own them. It's like custom grazing. Let somebody else own them. You don't need them to be grazing. If somebody else wants you to graze their cows, graze them. Doesn't matter. But I brought up the fact that I said, what happens if the guy that's doing the buying and the selling, if he dies? He had not thought of that. And I said, that would hurt you financially. Who's going to do it? I said, and what happens if you die? Who's going to feed the cows? Right? And so he needs to have insurance. There needs to be insurance both ways. Even though they are not in an actual partnership together, there needs to be insurance both ways. The guy working with him needs to have insurance on him, and he needs to have insurance on the guy buying and selling cows. And then he had another opportunity where he is selling some land. And he said, should I sell some land to pay off this note? Or should I owner finance the land to pay off the note? Well, we don't know the answer to that yet because we really need to we don't know how long the bank is going to stretch this note out because it's some past debt. So are they going to stretch it out 10 years? Are they going to make him pay it all off right away? If he doesn't have to pay it off right away, same case as last time. He can make a couple $100,000 extra on interest. You guys, somebody has to be the bank. If you don't finance somebody buying your land, they're going to go to the bank and the bank is going to finance them and make the interest. It doesn't frankly matter. Somebody's going to make interest. Do you want it to be you or do you want to pass it off to the bank? It's that simple. And so in his situation, it was ironic that if he's selling some equipment as well, because he said that he listened to my podcast that said, why on God's green earth are you holding on to something? And I don't know that I did this in a podcast. I may have done it on a Facebook Live, but he listens to both. So why are you holding on to stuff you don't need anymore? If you have equipment sitting around in the yard and it's just depreciating and you're not using it, why is it there? Get rid of it. And so he's getting rid of equipment and he's getting rid of stuff even that he could use because he's going to hire the neighbor guy to do it custom for him. Oh, I am pretty sure I've talked about this before too. Why does every farmer think that they need to have their own piece of equipment? Custom hire the next door neighbor guy or somebody in the neighborhood, because guess what? That guy gets to pay for repairs. He gets to make the payment. He gets to worry about if it's broke down or not. You don't necessarily have to worry about that. As long as he gets your stuff taken care of, does it matter? Does it matter? He said this was the first year he did it. He had him custom combine for him. And he said, oh my gosh, it was amazing. We had all kinds of other stuff going on at that time. He goes, there's no way I could have done that and not been under stress because we would have still had corn in the field. He said, it was awesome to have that hired out. He's going to do what he can do, but he's going to sell this equipment. And when he sells the equipment, guess what? He can pay off all kinds of other debt because it's equipment he wasn't using anyway. And so if he uses that money to pay down some of this note, can he then, his payment was going to be like $17,000 a year to the bank. And if he owner financed the guy, that guy would be paying him $17,000 a year. So for 10 years, that guy would be making a payment to me so I could pay the bank the $17,000. I have a wash for 10 years. Now my note at the bank is paid off, but the guy that I own or finance is still paying me for another 10, 15, or 20 years. Okay with me. If all the numbers work, we just need some numbers from the bank on him. But Is there more than one way to skin a cat? Yes, there is. And it was a pretty cool strategy if it works, and if the bank is going to allow that note to be stretched, and what that payment's going to be, and what the interest rates are going to be, and all that good stuff. But his banker said, no, don't owner finance it, because eventually you're not going to make as much as what you're paying. And I didn't quite get that. And the only reason why that would make sense is if the bank's interest rate was too high. So we have to check and see what's going on there. The other thing that I thought was really funny is that he's got this equipment ready to sell, and now the rumors that he's going under and he's not farming his own stuff anymore. Oh, for heaven's sakes. You guys, don't you have enough to worry about? You're like a bunch of gossipy women. Just because somebody is selling their equipment doesn't mean that they're going under. Again, ask what's going on. You know what? You know how insightful it would be if people would just pull into his yard and be like, hey, dude, what you doing? Why are you selling everything? He'd probably hand him this little book and be like, here you go. Best thing I ever heard in my life. Wish I'd have known about it 30 years ago. Right? But we just assume we know, and then... I mean, it's funny, but at the same time, you know what I'm all talking about. Don't be nosing over the fence. Just go through the gate and ask them. Okay, so he kind of had a lot going on, but great information, great strategies for you guys. Brett, I wish I could find people to owner finance. Seems like there's not many. Brett, there are not many of them around, and I am trying to educate them because people don't think about it. They don't understand that they can make more money, or they're scared to pay capital gains and they don't understand that they're not going to pay as much in capital gains. That is from an accountant. That is not out of my mouth. That is what the accountants told me. And so if we can owner finance it and transfer it, we're so scared to get rid of our land. If we're not farming it, why are we so scared to get rid of our land? Hey, Dave. Oh, I was listening to a podcast this week. I don't remember whose podcast it was. Anyway, I found it interesting and I started to think about it. And you know how people say, well, you should buy gold because the dollar is going to collapse. Now, I somewhat believe that. Let's just keep printing money and devaluing the dollar. Why not? However, if gold is so valuable, this is what Nelson always said, and it made me think. If gold is so valuable, why do you want my worthless dollar in exchange for your gold? Why do you want my worthless dollar in exchange for your Bitcoin? And I might be missing something here. I might be totally off my rocker. Please let me know. But it's similar when people say, I don't know why you want to farm. Why would you want to farm? There's no money in farming. Coming from the same person that won't sell his land and is still farming. If farming is so bad, why do you keep farming yourself? Right? Just what? Think about what you're saying. Like, I don't remember what I was listening to, and I was like, oh my gosh. That is 100% accurate. Why? Don't tell somebody not to farm? And who says it's not going to be successful? You? Okay, did you do it right? I mean, really? Somebody could have came in and said, yeah, Walmart, you're not going to be successful. Because that little store down the road wasn't successful, so Walmart, you're not going to be successful. And look at where Walmart's at today. Look at where Amazon's at today, right? If you do things differently and you do them right or manage money differently, it could very well be successful. All right, I got one left. So if you guys have comments or questions, put them on now because there's a little bit of a lag. This guy was a non-farmer. He has nothing to do with farming. He was referred to me by another client, but he has a lot of cash on hand. And he said, Mary Jo, I want to pay my property taxes through the policy because every month I put money into a savings account and then I use that to pay property taxes. And he said, your client who referred you said that I could use this for property taxes. And so his property taxes are about $6,000 a year. And so here's something that a lot of people can't quite get their head around, and I hope I can relay this so that it's understandable. If we take $6,000 and we put it in as premium, and let's say that we have $6,000 available right away to pay property taxes, okay? Property taxes have to be paid every single year. So if we borrow $12,000 to pay property taxes, we need to pay, or $6,000. If we borrow $6,000 to pay property taxes, we need to pay the $6,000 back so that we have it for property taxes again. Right? Then we're going to borrow and pay back. Every year we're going to borrow $6,000 and pay back. So if we put 6 in and we borrowed 6, we have to pay 6 back. Plus next year we have to pay 6 as premium again. So we paid 6 back to the loan and we have to pay 6 as premium. That's essentially $12,000. So $6,000 is every month. He's already putting that into savings. We have no problem paying that back. But where is the 6 that is premium is going to have to come from profit. Okay? So we have to, they're not the same thing. They're two different things. One's a loan repayment, one's a premium payment. So we have to make sure, like in his situation, he's got some cash on hand. So if his premium is $6,000, we can add another 6 to that year 1. So we can put $12,000 in year 1. He can borrow 6, pay 6 back, but next year his premium's not 12, it's only 6. And so we can, if we want to do something like that, we're going to give it a boost year 1 if we can. And then we're going to just, because it's a one time, we don't have to put that, we don't have to pay it as premium again. He still needs to have the money to pay the 6, which he does. He has enough to pay $6,000 every year, but not $12,000 plus the repayment every year. I hope that made sense. If not, I can't do it without drawing it out. I draw it out all the time. So it's just that people think, oh, I'm going to put 6 in, I'm going to borrow 6, I'm going to pay 6 back, and then I'm going to put 6 in again next year, and I'm going to borrow 6. Well, if you put 6 in and you borrow 6 and you don't pay it back, and next year you put 6 in and you borrow another 6 and you don't pay it back, now you owe 12. And then pretty soon it's 18, and then it's 24, and then it just keeps getting bigger and bigger and bigger. Right? Not a good strategy. But if you have some on hand, it's good to get started with. I had another couple that was really worried they weren't going to be able to get started because they didn't have enough. But we were able to find a little something just in a couple things that they were doing to start small. They do not have enough to do 2 policies, 1 on each of them. Okay, great. Then we do 1 whole life and 1 term. It's okay. Term has its place, but it's convertible to whole life later. So we guarantee the insurability. But I had a lot of non-insured people and or very low insured people again this week. And so if nothing else, at least hopefully we're changing the mindset around the fact that death benefit is still important, That's great that we can have some cash value. But if you don't want to do whole life, for heaven's sakes, get some term insurance. Because you don't know when something's going to happen, right? How's it going, Dave? Good for you, John. You know what? That podcast that I looked at, that I was listening to this week, that's what the guy said. Put an ad in the paper. Like if you're put an ad on or on online, or call people, or talk to people through your church or whatever. Find people that are willing to sell. There are people out there willing to sell. Not as many as wanting to get into farming. I have a lot of people that want to get into farming and less that want to get out. But that wanting to get out is a mindset thing. And we have some emotional attachment to it. And so that's not like asking somebody just to, hand over their baby. I mean, that's not going to happen. They're going to have some questions. And so it's going to take some time to find that person. But absolutely, look at you, 1.5 years. Dale, I listened to the Working Cows podcast, and then I think you're asking me, Dale. I listened to the Working Cows podcast, and then I was listening to, I listened to Off the Farm Income once in a while. It's a decent podcast. I like it depending, he's got some good guests, and then there's some stuff that just doesn't really apply to me. And so I listened to that one, Off Farm Income. Damian Mason is the Big Business of Agriculture. His podcast is really good as well. Let's see who else I listened to for egg related. This is what I find. Most egg related, the Working Ranch radio show, he's usually got some good stuff on there. And now I think he's got a new podcast called The Ranch. But the other show that you guys might find interesting is the Wealthability Show by Tom Wheelwright. He is Robert Kiyosaki's accountant. And so he talks a lot about taxes and those sort of things. And I do like that show as well. So here's the thing with agriculture podcasts is that, sorry, I'm just looking for the other ones that I think you guys might like. That's about it. Ag State of Mind is more mental health and agriculture, and that's a good one too. Jason Meadows is amazing. But a lot of the farm podcasts that I have looked at or looked into, they are very market driven. Oh, this is what the market's doing today, and this is what Congress decided, and these are the bills being pushed through, and more of that sort of thing, which I don't get into because I find that very negative and not providing any kind of solutions. And so I like agriculture podcasts that are providing solutions and that are talking about something to make our farm profitable and those sort of things. And it's hard to find those podcasts for me because I'm not farming actively. I don't need to pay attention really to the cattle market. I do, so I know what's going on for you guys, but I don't because I'm selling something. I don't need to pay attention to what's going on with wheat and durum and corn and all that stuff because I'm not selling it. And so I'm not getting into that fight, or not fight, but into that arena. And then you've got speaking of fights, you've got the whole war on food and then, it's just, there's so much turmoil within agriculture. Like people are fighting amongst each other, which drives me insane. There's not enough of you to be fighting amongst each other. And so I I want solutions. I want to be able to provide answers, not be the Debbie Downer. So those are the ones that I've come across that are good. If you guys have podcasts that I would like, please let me know. I'm always open to podcasts. I listen every single morning. I listen to a podcast before my day gets started, and every single day I am learning something. Every single day. Your tax podcast. If there are multiple policies, was the accountant saying to borrow out against cash value so it wouldn't go towards inheritance taxes? I want to make sure I caught that right. If there are multiple policies, Holly, as far as inheritance, like estate, the estate tax, if you own that policy and it's on, so let me think about this. I think I know what you're asking. So if we have a policy on you, and let's just say that, you know, your estate is over 11.8 million right now, that death benefit becomes an estate tax. It becomes estate taxed. If your estate's over 11.8 million, it doesn't matter if that is one policy or 5 policies on your life. Now, if you own a policy on somebody else's life and you pass away, there's no death benefit paid out there. There's just going to be a policy. And I don't know how that is figured into the equation with the cash value. I would assume that would be an asset. And I'm not sure how that's passed on at that point. If that's what you're asking, that is a very good question that I do not know the answer to. I will write that question down because I talked to my accountant on Monday. And so I will ask my accountant, and I'll email you, Holly, and see if that's what you're asking. But if you are the insured and it's your death benefit and you pass away, it doesn't matter if it's one policy or 5, they're all going to add up together, and that's going to create the estate value. Just on whoever passed away. Now, if you own it on somebody else, I don't know the answer to that. I hope that helped. If that didn't help, Holly, just email me and let me know. I missed what Sandy said. Everybody's picking on Sandy. 70 degrees today. It was raining here. We got some rain. I'll take it. No, Dave, it's Working Cows podcast. Check it out. It is not Working Cattle, it's Working Cows. Back to the Roots podcast is good if you're an organic or similar. Oh, that would be interesting. Even if you're not organic, it might be, it's regenerative egg. And there's so many people that are going into regenerative eggs. So thanks, John. Okay, that is that's all I've got, you guys, tonight. That was still an hour. I try to be fast. I try. And then I get sidetracked. But I love it because you guys have questions for me. I love it. See, Facebook is social media, and I love it when you're social and you talk to me. Okay, now I'm sure all of you have these books because you're all talking about them. But remember, Christmas is coming and you can get them for your family and your friends. And please share this, share the information. I have so many awesome clients that tell everybody about it, and people are going to think you're crazy. Today I had a meeting, or was it yesterday? I had a meeting. I think it was yesterday. Let me look at my calendar. No, it was this morning. I had a meeting with a guy that I talked to earlier this year, and he told his mom and dad that he has a meeting with me again, and they're like, "You're going to talk to her again? She's just going to sell you something. Don't let her talk you into giving her a bunch of money." And I thought it was really funny because they bought a whole life for him when he was a baby. And so he's got a whole life policy, and it's working great. And they don't like whole life. So, kind of funny, but that seems to be, they are not from North Dakota. They were from a southern state, equally as conservative as North Dakota. So it seems to be that people think that I am a thief and I am salesy. And so those of you that have had meetings with me, I know you can vouch for the fact that I am not salesy. And if you say I'm salesy, no. I'm going to say you're picking on me, because I am here to provide information, and you guys can do what you want to do, but it is provide information. And a lot of times I'm not letting people start as big of policies as they even want. And so it's funny how what was interesting about that situation too is mom was complaining she was bored. And so he's like, "Well, we're out farming, you're bored, why don't you listen to her podcast?" I'm not going to listen to some lady try to sell me life insurance. So we already assumed that we knew what we were talking about, right? And arrival syndrome at its best. And one of the clients I had this week, we had such a wonderful conversation just about arrival syndrome, about Parkinson's law, and how hard Parkinson's law is to get over. And if you don't know what Parkinson's law is, listen to my podcast on it, get Nelson's book, and read Nelson's book. But when our income rises, do our needs need to rise as well? And anything that we have extra, can we put that away so that we can capitalize this system and get out of the banks? Because if we're not going to do anything different, you have no right to complain about the banks. You just don't. I don't want to hear it, because you got yourself in the mess and you chose not to do anything differently. And so you can't say that I'm horrible when you don't even know if I'm horrible, right? And it's not the first time that's happened. When I was very early on when I started this infinite banking and teaching this very early on in my career, I got a call from the insurance department that said, "Hey, we have an inquiry, from an individual that you tried to sell life insurance to her son." And long story short, obviously nothing came of it, because I tried to sell life insurance to her son exactly like I show you guys how to have life insurance and structure it to be cash value rich and how to use it. And he did not buy life insurance. And guess what? He passed away a couple years later with like 10 grand of life insurance, 2 babies and a wife. And did mom help the daughter-in-law try to get out of debt? Nope. Help her with burial? Nope. Help her with funeral? Nope. Helped her with nothing. Nothing. The same lady that said, "I'm trying to steal his money." So I have a little bit of a chip on my shoulder, and I'm going to have a little bit of German passion around that one. That, you know what? If you are going to tell somebody not to buy life insurance, then are you going to fork over the money needed? $500,000, $1 million? That's going to be needed to take care of their family. Put your money where your mouth is. Or listen and open up to understand that what we're doing is not working. You want your kid to buy the farm again? How about he can buy it with some discounted dollars? So it is not just this particular client's parents. This happens a lot. And it seems to me it's more of an issue with North Dakota, but because we're so conservative. oh my gosh, I've never heard of it, right? It's 140 years old, but I've never heard of it. The stock market is 46, or 401ks and IRAs are 46 years old, but that's what everybody talks about, so that's where we need to go. But this product that's 140 years old, oh no. Really? Is it just because we don't hear about it and we choose not to? I would say yes. Okay, you got me. I got on a soapbox. That's it. I mean, I had a lot of other meetings this week with clients to issue policies, but those were my new peeps. If you need anything from me, feel free to email me, maryjo@withoutthebank.com, and I would be absolutely happy to answer you. Give me a podcast idea, whatever, happy to answer those on a podcast as well. You're welcome, Brett, and thank you for being here. And Dave and John and Holly and everybody else that's still listening. All right, you guys, you have a fantastic night, and we'll see you next week. I may be changing these podcasts to an earlier time, just because it gets dark so early right now, but we'll see. You'll get a notice. Okay, have a good night, and we'll see you next week. Oh, no, we won't. It's Thanksgiving. Have a good Thanksgiving.